The United States just announced a $10 billion tariff on $300 billion worth of Chinese goods, a result of which stocks plunged, bonds plunged, and oil plunged as well. Now, the Fed cut rates yesterday and cited weak global growth and a chill in business investment when they said that they're going to cut rates. You'd expect the lowered cost of borrowing to be good news, except when it's not. A decline in borrowing cost can help some highly indebted firms. That is cheaper. Billion-dollar loss-making startups such as Netflix, Uber, and Lyft can now use debt financing to pour in more money into their already loss-making operations to boost growth. But it seems like the Fed rate cut didn't exactly accomplish what it set out to do. It turns out a little like Powell himself doesn't know what he's doing. He first says that this is a mid-cycle adjustment. Then when analysts asked questions during the interview, he said that this isn't going to be the first in a long rally of rate cuts. Then he goes on to say that this isn't going to be the only rate cut. Sometimes I think about how this guy gets to decide what ice cream he's going to get. Now you might ask yourself that this kind of uncertainty that the central bank's policies have created may just be an imperfect instrument towards changing economic activity. Now it's obvious that the Trump administration views tariffs as a critical tool that is needed to pressure the Chinese economy. Obviously, this is not about economics, it's about politics. More importantly, it's about power. I'm not a conspiracy theorist, but it seems like Trump is going to put further pressure on the Fed to cut rates and make sure that he won't stop until he gets what he wants. Will this really work out for the US investors and the market in the long run? Who's to tell? It's clear that what Trump really wants isn't just a Fed rate cut, but a re-election. Politicians need to grow up and realize that the trade war isn't a game where there are going to be any winners in the end. It's more like a messy divorce where the fight is really between who's going to lose more. I get it. There are reasons for divorce, things aren't working out, you want to assert your dominance. But at some point, the parents will have to start thinking about what's going to happen to the kids. The loser here isn't going to be Trump or the economy. It's going to be the retail investor, the capital that has been already invested in billions of dollars in pension funds, mortgage loans, and interest rates. How this will pan out in the longer-term economic output for either of these countries is something that is not certain yet. And this kind of uncertainty is exactly what leads to panic sell-offs in the market, which is something we witnessed yesterday and today. Who's going to be a winner in this trade war? Let me tell you, India. A country that has neutral geopolitical ties with both the US and China is set out to be the clear winner. Not only does the trade war provide this country with the opportunity to trade with the US, it also affords it the opportunity to replace Chinese goods that are being imported in the United States. For you and me, it may be time to think about what the Fed rate cut and what the trade war really means. It's not merely an economic instrument that is going to affect our pension funds, our savings, and our credit cycles in a short term or in the long term. It's something that quite literally will affect the political and economic future of the country. The reason reserve banks or central banks of a country have been set up independently in the past is to avoid any kind of political interference from individuals much like Trump. But it seems that that's not the case anymore. The Fed's credibility is becoming much more like the one of Fox News, and you might want to think again about who you're voting in the coming election. Thank you, and see you tomorrow.